In my previous discussion, I took you through a very brief history of the development of the IASB, or the International Accounting Standards Board. In this presentation, I want to go through some of the reasons why a country would or wouldn't want to adopt international accounting standards. So I'll bring my presentation up on the screen now. Okay, so the reasons for and against adopting IFRS. There's no doubt that there's real benefits from adopting the IFRS. And we had a look at some of those in the previous session. However, there are other considerations that you should be aware of. The benefit of the IFRS predominantly is that it's a common set of standards. So in its purest form, each country on those standards would standardise so that there are no variations. That means you have a true international set of standards. The reality, however, is quite different. The IFRS is a one-size-fits-all solution. So you have to ask the question, is that reasonable, and why would you want that? Well, the benefits from having a one-size-fits-all or a purely standard set of standards is the comparability issue. So it helps you raise capital, it drops your costs, investors can compare apples with apples, and so on. However, most countries, even serious adopters such as Australia, tend to localise their standards to a certain extent. And every company that adopts the IFRS has this freedom to do so. But every change you make reduces the benefits. It reduces the comparability, for example, and it reduces the cost savings in preparing your financial statements from one jurisdiction to the other. So this is not an argument about whether you should or shouldn't, but it's an argument about whether it's right for you to adopt international financial reporting standards, and to what degree would you want to modify them. So when we look at the IFRS heritage, that gives us a clue of what those standards look like. They're very British. So when I was first studying accounting, there were no international accounting standards. We had Australian accounting standards. And I have to say that they look substantially similar to what eventually became the International Financial Reporting Standards. Why? Because we had already adopted a very British approach to our standard setting. So there was already a British heritage in our accounting and our accounting standards. So that made it rather more easy for us to adopt the International Financial Reporting Standards. And I guess the same argument could be made for other countries with a strong British heritage, such as Commonwealth countries like Canada and New Zealand and South Africa, and perhaps even for Hong Kong as well. This emphasis on the British way of doing things soon brought about the United States pulling out of the process to a large extent, because they were very wedded to their generally accepted accounting principles, or GAAP, and were unwilling to forsake those for the international standards. And the difference between the United States and Australia is that the GAAP are a completely different approach to financial reporting. There are real fundamental differences, whereas in Australia, there are a lot of similarities between the way we presented our standards and the way the British did. So, the standards are a one-size-fits-all, but each country is different. How many ways can a country be different? The quick answer is lots of ways, of course. So what we're going to go through here are some of the ways. Your textbook on this offers a lot of in-depth discussion, so it's well worth reading. Okay, so I mentioned the difference between the Australian standards, the international standards, and the US GAAP. So the principal difference is that the US system is a rules-based. So they have thresholds or rules throughout their standards that trigger action. Now, that makes their standards easier to implement in a way. And the international standards are principles-based. So that demands a lot more of the accountant to provide professional judgment. The other side is that the rules-based standards offer a lot of ways for the more creative accountant to circumvent. It's much harder to circumvent a principles-based approach. Every country has a different tax system, and that's something you just can't get away from. So that more or less necessitates that every company has to insert in their standards recognition of the way that their own taxman collects revenue and recognises revenue. Attitudes to debt. So in the Western Hemisphere, we have debt is basically one of the main engine rooms of commerce, whereas in the Islamic part of the world, debt is not as welcomed or embraced in the same way. So they have different rules for engaging in debt and bringing investors on board. Now, this is not to make any judgment at all about which approach is better, but you should recognise that such a fundamental different approach to raising debt must impact on the standardisation process on international standards. Many countries in the world have recent or somewhat distant colonial pasts. Here in Australia, we certainly do. Now, if you are in a country that's just emerging from a colonial past, and particularly if that wasn't a pleasant experience, these countries may not be willing to reduce their sovereignty to adopt somebody else's idea of accounting, particularly a European idea of accounting. On the other hand, countries with a British colonial past, such as Australia and New Zealand, do have an easier time in adopting the international financial reporting standards. What kind of education is in the country? What level is it achieving? So as a general rule of thumb, countries with a very high general level of education tend to think more globally and are more likely to see the benefits and wish to partake in the international financial reporting standards. On the other hand, countries with lower levels of education tend to be more insular in their approach and more inward-looking and are less likely to want to adopt IFRS. And that's just some of the reasons. So I highly recommend that you do further reading on this. And if you're studying in accounting theory at CQ University, where we are using the Craig Deegan text. And so I highly recommend the discussion on this. So that's my presentation on whether you should or whether you shouldn't partake in IFRS. In the final presentation coming up, I'll have a quick look at what is harmonisation versus standardisation, and we'll revisit some of the issues involved in each. So I'll see you at that presentation. Bye.